Yo, like the thing with the string. It's your boy Chep Woods, and welcome back to Generational Money. Today we got a CPA on the show with us, Garrick Bradley. What's up, Garrick? How you doing?
Doing well.
Man, why don't you go ahead and introduce yourself and tell the people what it is you do?
Absolutely. Garrick Bradley. I'm a CPA. What exactly I do? Work for a commercial real estate firm where I focus on risk management with the clients, and also got my own accounting business. So that pretty much keeps me busy, and also have a wonderful wife. So the family, the job, and business keeps me pretty busy.
Absolutely. How long have you had your accounting business?
I've had that since 2017. When I first started out, I was working with this one brother that was doing it for over 30 years. And that's really when I learned the game of taxes. Before then, when I was in school, I was focusing, some of the accounting professionals will understand this, but after you're done with school, you pretty much pick, are you going to be team audit? You're going to be team tax.
Right.
I was team audit.
Fact.
I didn't want to touch taxes at all. I was like, ooh, taxes? No, not at all. And then fast forward until when I was writing a blog, my auntie got me in contact with a brother that's been doing it for over 30 years and everything. And I said, you know what, let me go ahead and try it out. And I ended up liking it. And then from there, I want to say that was around 2015. And then once I started understanding, learning the ropes and everything, I said to myself, okay, if you're going to keep going down this path, you need to start setting yourself up properly with setting up LLC and everything and getting yourself, all set up in the right way.
Absolutely. So did the guy who's been doing it for 30 years, did he become like a mentor to you? Or?
Oh, yeah, absolutely. He was in it for over 30 years. And it was more than just the taxes. It was managing the client, understanding the business, the ins and outs. So when I was working with him, it was the school of hard knocks of what is it to be in this space and understanding what are the pitfalls you got to think about, like how is it that you have to strive and everything. So it was, he was a wealth of knowledge, and he still continues to be my mentor. So
that's dope. Yeah. That's dope. Yeah. The mentorship is real valuable when you're trying to like elevate, get to the next level. You know what I'm saying? Like,
yeah.
Without my mentor, I don't think I'd be the filmmaker, photographer I am today. You know what I'm saying? Where'd you go to school and when did you graduate?
Yeah, I went to the University of Illinois, Urbana-Champaign, graduated with my bachelor's in 2014, and then graduated with my master's in 2015.
Oh, real quick with it.
Yeah, because I wanted to, we could take advantage of the Illinois program where they basically had it set up if you did 4 years, if you, apply and everything, you can, be able to get it done in 1 year. So I applied, stayed there, said, because some programs can be 1 year, some could be 2, but I was like, I'm just going to stay there and, be able to get it done.
So what led you into finance? Like why'd you choose that as a major? Like a lot of kids coming from where we come from, financial literacy and finances ain't like a goal growing up, right?
Yeah.
Everybody want to be rich, but not everybody want to like go formally learn about finances. So
yeah. It's actually funny because before I wanted to be an accountant, the first thing I wanted to be was a scientist. So
right.
I got influence from, I'm laughing at this when I still think about it, but if you remember Cartoon Network, Dexter's Laboratory,
absolutely,
where he would be making things and tested and things wouldn't go right. I don't know. That was something that kind of got me into, I want to test it out and everything. Had no idea about scientists, didn't get involved in anything, was just in my head. Then there was at one point I wanted to be a lawyer, and I was in high school and they had a career fair and professionals came in and everything. I was bright-eyed, bushy-tailed, sitting right in front of the classroom, ready to take notes. This attorney came in, they're giving their spiel on what they do. I fell asleep right in front of them. I was like, okay, clearly this isn't you. what you're interested in. So it wasn't until my mother got me in touch with one of her friends at the time that was a CPA, and it was this program called Accounting Career Awareness Program. It was ran by the National Association for Black Accountants. So This was, I think, my sophomore year, junior year in high school. And so what I loved about that was it was showing you accounting and everything, but it was really pushing you to the corporations and businesses. So we were touring corporations, other businesses, and seeing what people do and did and everything. And it was like, oh, okay, I kind of like this. And then I read a book, Rich Dad, Poor Dad, and that really was like the finances. And I was reading other finance books and just started knowing the correlation of, like, at the end of the day, I want to be a business owner.
Absolutely.
What is going to set me up for the most success in making that happen? And the correlation was accountants. I was seeing that constantly. So I said, you know what? I'm going to be an accountant. And so that started the journey of me saying, I'm going to, before I got into college, I already knew, like, I want to do accounting. I want to, focus on this, and we'll see where it goes and where it takes me. And fast forward to now, I didn't necessarily envision it would be an actual accounting business, but I'm glad that everything worked out with it.
So you went from auditing to doing the tax stuff. So can you tell me a little bit about, like, the auditing experience and why you left? Was it less fulfilling, or you just thought taxes was you enjoyed it more?
Actually, I still do both.
Okay.
So I still maintain a 9 to 5 and also keep things running. And what I love about getting the best of both worlds is the beauty of all of it is it pushes you to ask questions on everything, because you are asking about what someone has done and getting evidence to prove that they did that. And you, at the time, really don't have as much information or understanding, but as you peel back the onions and start to get more of understanding, I always like that piece of it. And, some people will find it being on the receiving end a little bit more nervous, a little bit more anxious, because, you check your stuff and you report in like, hey, you might possibly do something wrong. So I've always tried to take an approach of understanding, trying to come with questions, really try to gain the facts and circumstances. So I'm reporting what's actually happening right, without it being more so on the person. And then for the taxes, oh man, I would say the beauty with that was when I first began doing taxes, I first initially looked at it as, you make an income and then you get taxed. And then as I kept getting further and further in the profession, I started to understand, okay, taxes play a really huge role in our economy and the movement of money and what comes with just taxes in general. Individuals come to you to help out with taxes. Business owners come to you to help out with your taxes. So I sort of looked at taxes as a conduit of having this conversation and understanding of somebody's operations, and that ultimately being the starting point of things that keep me going.
Dope. You mentioned a blog earlier.
Oh yeah.
You currently do a blog? You had a blog?
I used to have a blog. So after I graduated from U of I immediately studied for the CPA exam, because I knew starting a full-time role, I couldn't balance both. My wife at the time was my girlfriend, then fiance. So I'm looking at it and saying, I'm going to be trying to balance work, significant relationship, and try to get the hours in from studying. I was like, this is too much. I was like, but while I was able to be in school, graduated, I was able to take the exam and pass before starting my full-time job. And pretty close to right when I started the full-time job, I decided I'll start a blog on personal finance, and it was called youngwealthbuilders.org. And it was really focused on writing financial topics in a way that was very digestible to people and tying it into building wealth. So at the end of each article, whether it was dealing with savings, whether it was dealing with credit, personal credit, or a number of topics, I would really try to tie that into how exactly this builds wealth. So when someone came away reading that article, they understood, okay, this is how, credit works and my understanding of it. Here's how savings come into play and so on. So
that's dope. That's dope. So with the blog and passing your exam and getting a master's degree and having a successful business, can you just talk about some of the milestones that you feel like you've had in your career thus far?
I would say the first milestone was working at one of the largest accounting firms when I first started my career, because I didn't realize how much of from a resume build of how good that really looked, and what set me up from what does quality look like when you think of an accounting business. And so I looked at that milestone as, being the new CPA and, getting things really started with my career. That next milestone was getting into taxes and really getting the hard knocks and actual practical piece of it, and not just the academic. And at a point in time, there was a time that didn't lose my first job. Second job that I had, I got let go as a consultant at a consulting firm. And the good milestone was seeing how much of a benefit having my license was, because at that time I made a jump to a consulting firm and had like less than a year under my belt in making the jump and everything. But when I tried to find another role, it took me about 6 months to be able to find it. But I found a company, this is before COVID, where I could be in audit and we traveled 2 weeks, pretty much 2 weeks out of the month. So it was a manufacturing company that basically owned multiple mom and pop manufacturing companies throughout Europe, Asia, United States. Those were their biggest space. So every 2 weeks, I was flying out somewhere, going to audit another business, and it was great. Intimidating too, though, because I remember the first time, I flew to Germany, and it was a company that was in Ulm, Germany. So basically a rural area in Germany. And I remember I was still new. I was probably like like a couple months into the job, and everybody in the office was used to traveling.
Right.
So they were like, okay, go ahead and book your flight. Go ahead. Okay, we'll meet you in Germany. I was like, whoa, wait, what do you mean? I'll just meet you in Germany. Like, can you, like, I know how to buy a ticket. I know how this process works, but I'm like,
what hotel y'all staying at?
Right,
like, what we at with it?
Hotel, what airline, and the team showed me the ropes and everything, but it was so routine for them. And that was a big eye opener for me. I traveled to different countries before, but like for work by myself, a new country. And then I'm also looking like they speaking German. Do they know English? That was a big like, oh, okay.
And how long, and you would be there for 2 weeks at a time?
Yeah.
Or every 2 weeks you travel?
Yeah. Sometimes it'll be 2 weeks, or sometimes it'll be like 1 or 2 weeks. Yeah.
And like, how often were you home? Like you worked that gig for how long? You say you worked that
gig? It was a year and a half, because it was really.
And did you stay constantly just like traveling, or did you like have time?
I had time where it was like 2 to 3 weeks where I would be at home. But if I had to go fly within the U.S., I'd probably, when would we fly out? Sunday, and then come back Friday. And then if it was international, we would leave that Saturday weekend, and I think come back either that Thursday or Friday, like flying back.
Constant. It was like he was like on a roll like an NBA player or something.
Oh man, and then but this is before COVID and how the company had us set up. Oh man, it was
decent.
Man, I feel like a rock star as an auditor, and I was like, man, this is crazy. I was like, we could book. Because
nobody usually like auditors. Like that gig got a stigma to it for sure.
Oh yeah. Like people, there was times I would go in the office and they would announce, "Oh, the auditor's here." And I'm like, "Sir, you don't need to. There's only a handful of people that I need to talk to. You don't need to announced that I'm
everybody needs to know. No, everybody needs to know
like,
you're in there.
Auditor. I was just like,
See, I used to work for a company in the social services space, the case manager, and we dealt with clients, and they would pretty much tell the government we're going to do X, Y, Z, and the government will come through to make sure we were doing X, Y, Z to make sure so we could get funding for the next. So your files had to be a certain way, and it had to be a certain language, and man, whenever it was an audit coming up, everybody needs to know. You need to be on point regardless. But in real life, in that field, you're dealing with like at-risk individuals, and it's like a lot of boots on the ground you're doing. So sometimes your paperwork and files might get a little off, but when the auditors come, you want to try to tighten it up. Right. So from that standpoint, I can understand why they making an announcement.
No, I get it. It's just because I'm so used to being in the space. It's like, I understand and I get it. But what I try to approach with people is like, look at it as just like it's a health check. Look at it as is a maintenance, and tying that into day to day. I didn't realize until I started working in other businesses that like, you have all this, but just documentation and paperwork of what you do just becomes so important, because if
CYA,
absolutely, or if you didn't document it, didn't happen.
That's the golden rule.
And you never know when someone will come back and say, hey, what is this and that, and then I got that, and then you going back and looking for it, and he's like, I don't have anything, versus, I have something. This is what happened. Okay,
absolutely.
Great.
And when you say getting rid of the sickness, it kind of took me to like, because I didn't work with some individuals who kind of like, you're only as strong as your weakest link, and they were cancerous to the team. So if the auditors do their job correctly and everything goes as it should systematically, I would say, then it's kind of like when you take medicine or you dealing with a sickness, you kind of getting the problem out. So somebody might lose their job, but ultimately for the company, it's still what's going to keep things rolling. You know what I mean?
Yeah, they and every business is different. I notice, because I worked at firms of all different kind of sizes: 6 figures, 7 figures, 8 figures, 9 figures, and and what I noticed is those that was really top dollar, that's 8, 9 figures. It was just like more paperwork and document.
Thorough,
it's a lot more thorough, because also the pedigree of clients and customers that they have as well are also requesting and requiring of that. So that was a bit of an eye opener. Or sometimes what you said, to your point, a CYA of being in commercial real estate and just kind of being exposed. Like with my role, I see what people don't see, like the the bad stuff that goes on, and sort of managing that, and certain things that you didn't think. Like if someone is in your establishment and like trips over wire, you might sit there, but that's not trip, but that's actually could be a potential liability. And it's like, wait a minute, someone's gonna say, you work for this company, let me see if I get some money out of it. So it's like, that's a in terms of that risk and audit and everything, that's where it's like, wait, what can go wrong? How do we make sure we don't?
And you said a gem, like the 8, 9, 10 figure companies are more thorough with the paperwork. They don't take it for granted as much as maybe a smaller entry level or up and coming business. So the more money you make and the more money you moving, the tighter you have to be.
Oh, you want to protect that, especially with wealth. You want the more money you make, you also want to have that protection element in mind. So that's where all the documents come in, legal agreements, all that jazz.
One of the things that I said, if I came up on like 7, 8 figures, I'd probably find somebody like you. Let's say you inherited 20 million.
Okay.
Would you, cause like therapists have therapists. Would you get somebody in finance to help, or because you do you in this space, you feel like you can do it? Or would you get somebody to hold you accountable maybe? Does it work like in
I
this
definitely
space?
I definitely would.
You still would go pay somebody?
Oh yeah, because it's still because it's like as I think about like that 20 million, right? There's somebody else that is out there that can give me way better rate of return on my money than I can. Now, I'm gonna play it smart and not give them the full bag. There's definitely a bag that a portion of that 20 mil I'm gonna have on like reserve saved up to make sure I'm good and the family's good, but then also have a portion of it where I'm saying,
let's
you professionals, right?
Let's get it.
Let's build. Let's see what we could be able to. Let's see what we could be able to do with it. I just came to realize this, in this world, your time is very finite, and it's a bunch of professionals that specialize in things that could do a way better job than you. So why don't as I'm building this, why don't I just go ahead and slide you some money and say, okay, you're gonna make these investments, you're gonna do this, you're gonna do that, great.
So with your full-time job in your business, which is making you more money?
It used to be a point in time when it was just a 9 to 5, it being more. Now surpassed it, where it's like the business is making more.
That's dope. So let me ask you, do you have an exit strategy for the 9 to 5, or you just gonna rock it out even if the business keep growing? I don't know if like having a 9 to 5 would be like in the way of the business growing, right? Because that's like, I don't know how many, if you're working full time, that's 40 hours. But like, is there an exit strategy, or you just gonna keep coasting both? Right. You said you enjoy doing both worlds, so
Yeah. I don't think I haven't landed on a particular number yet, because as each level that I continue to grow, I'm really taking the time to understand what does that level feel? How is it? How do you maintain this? Because with business, what makes things very risky is that you can make 50,000 next year, and then 75, 100, and then that following year hit a dip. That doesn't, every year is a reset. Not everything is not guaranteed. Whereas with the 9 to 5, it's pretty much continue to perform as you can perform. And as long as you continue to keep your ducks in a row, you can see the check coming, cash flow coming in as great. And then in some of these cases with where you can go, you can get nice bonuses, benefits covered and everything, and be reaping the rewards of it. Whereas if you did that for your business, it's probably going to be, an additional cost. So taking all of those factors in, I'm really just taking my time, just having it, continuing to elevate level. But at some point, I do look at it at a time where if I get it to a certain level where things are going well, I'm going to have to seriously take a look and say, hey, you know what? I have to dish this to the side because this is growing, because I still have other things that I want to get into, want to be more involved in. And it's really more so of, at that point in time, it's not a question of, do I have enough finances to be able to support my family, but more so of, okay, how much time do I have remaining in this world? Let me use the time of how I ultimately want to, because I have more freedom.
Absolutely. Yeah. And that's what we try and get to.
Oh, absolutely.
Freedom. So can you give like the viewers, especially the people maybe who coming up in the financial space, or just any entrepreneur, like how you manage growing your business to surpassing your 9 to 5? Like that's, not easy to do. Like, what tips do you have? Or like for you, how was you able to scale your business while still working the gig and having a family? Like you juggling, you know what I'm saying?
Yeah. It's definitely going to be some sacrifice for sure in some things that, you're going to have to give up. But I would say the biggest thing is it demands, to keep that going, you need to have like excellent organizational skills. Not, and it's not going to happen over time, right? It's going to take some time when you're in situations, but your organizational skills got to be tight.
So what do you do? Write everything down, use a calendar, alarm system, alerts?
For me, it's systems and software, but it really came down to kind of going back to the piece with the documents. I got into a rhythm to where whatever's on my plate, I know exactly where it's at. I can just, have some notes jotted down or use some tool to be able to say, this is my stopping point of where things are at. And then the next is just time management. I had to really focus on getting the time management down, because it would be, hey, you got clients that you got to work with after hours, and you also have the deliverables before work, and you only have X amount of time in the day. So what exactly is going to take priority? Well, what takes priority is the bread and butter, and then whatever you can do with your business, you could be able to do with it. But this is the priority of understanding what you need to be focusing on. And then after that, I would say management skills, people management and understanding how to delegate. I had to get really good at that, because I knew if in our space for the accounting business, you can make a good amount of money, probably around 200 or 300K by yourself, but you will be working like crazy to keep that going, and you'll be fine. You can almost even set it up in a way to where taxes, that's all you do, and then the tax season over, you sit back and chill. You could be able to set it.
You can enjoy the fruits of your labor still. Mm-hmm. It was sounding like you're gonna be working so hard that you might not even be able to enjoy that 200-300.
Exactly. So I looked at it like, I need people. I need to delegate.
So you have, for your business, you have subordinates. Mm-hmm. Okay, that's dope.
I had to delegate because it was reaching a point where, like, when I was very incremental. I didn't take on too much, because operationally I wanted the service to be good. I wanted the service quality to be good, and I knew that needed to be battle tested. So I knew the first client, rough draft, second client, okay, third, fourth, fifth, constantly refining that operations and getting the pricing down to really get it at a point where, okay, when you start putting yourself out there, you got to deliver. You can't
calling me up, you know what I'm saying, getting some of that design work, getting some of them templates, you know what I'm saying, shameless plug. Hit your
line like, hey, what's up? You got to be ready to absorb. So absolutely. I knew each time I was, okay, take on these clients, understand it, okay, and then when it got to a certain level, let me bring somebody on and go through those ropes. And I was very incremental and very thoughtful with it, and not being overly aggressive, because I would observe other people do it, and it was like, yeah, you got the money, but in terms of securing it, it was a little bit more difficult. Money was fleeting, because it may have been a product.
Yeah, it's not like you put quality first, like it's a high value.
Yes.
Especially over just like, running it up and getting a lot of people is like, yo, let me position myself and develop a system. Mm-hmm. With this sample size, then I could hire people to ramp it up and take on more people, right? So now I could kind of get to the quantity, but the quality is already established. Mm-hmm. You know what I'm saying? So you got like a training protocol, or how does that go? Like when you bring on a new, excuse me, I don't know. Let me take a sip of this.
Oh yeah, absolutely.
When you bring on a new person, like you already know, like they are knowledgeable in accounting space, so you got to train them to kind of know your systems and how you communicate to people.
Yeah. It first started off as I would try to get, and this is why I took my time with it, because I first started I'll give you the current, and then I'll give you the before of what it is now, and then what it was before in working out the kinks. Now, experience, trainings, put it together, you're ready to go. Now it's more of on the job, just on the job, hands-on training as long as you go, because in servicing clients, everybody's different because of the personality, the psyche, and dealing with finances. Every client can be a little bit unique, so you can't really train.
Tolerances are different, and
it's difficult training that. It's difficult, but that's where having that experience come in. Before then, that's current state now, which is great. Helps a lot with quality. Before then, I remember it was college students. There was a couple of college students that was, going back to U of I, like, hey, let me see if I could go ahead and find someone to be able to assist me. And then I started to realize, like, hey, you got to put a lot more work in with this person because they know nothing. They don't have the experience of doing the bookkeeping or the taxes, because this may even be their first job. They may not have ever serviced a client. So I started to sit there and think, I said, okay, I was like, you can't even put this person in front of a client. So how much time is this person really saving you? Like, how much of a return are you really getting? So I needed to keep modifying the model. So then it was through word of mouth. And I was like, okay, this isn't going as good as I thought it would be going word of mouth. Let me go with what I know. Let me go use Indeed, write out the job description, role. So I understood. Right. I had a very clear understanding what exactly I want you to do. For the amount of time of what it would take, I already had a good sense when it came to clients. So I made it to where whoever I pick, you already have a clear understanding of what you're walking into. There is no surprises. Like, hey, this isn't, I got so much coming in where I'm about to keep you 40 hours a week. Like, no, this is part-time. This is not going to be as many hours. And so when I changed to that, that's when it really started like, oh, okay. Results start really like being as quality as the practices that you trying to build. Right. Yeah.
Right. That's dope. Man, so what's a common tax mistake that you see families make every year that's costing them money?
Ooh, and you said families.
Yeah, not on the business side.
Yeah, not on the business side.
Family side. We're going to tap into the business stuff, but I want to talk about the family.
Families isn't as bad because most of the documents you get is like from a third party. So it's a 1099, W-2, your mortgage. So that cuts the chances of really not giving as much wiggle room. I would say, and then also too, when we had the change in tax law, what you used to have happen was a lot of people could be able to itemize. So the problem I'd have to look back at like the right cutoff time when the tax law changes. I'd probably say maybe it was around 2017, 2018. Don't quote me, but essentially when they started putting in the limitations on how much you could pay with like other taxes, limitations on the mortgage interest that you could have. All of that tax-wise was called like a Schedule A, an itemized schedule. So what you would see problem-wise with families was like, hey, you taking credit for what you pay for. Did you charitable contributions? Give us that so you get more deductions. Dental, medical expenses that you pay, hey, give us that to get more deductions. Since when they changed those tax laws and limited that, not as many people itemized. So that sort of cut it and simplified it a bit on the family side. So most of the time of what I see in family, it kind of all comes back to the areas that you're not going to have a 1099 or some form that you received or something that you are going to have to produce, like how much like daycare. If there was anything like any expenses that you had to pay out of pocket and you had to maintain those records, that's where people, trip up. So I would say those itemized deductions, that's really where you see it.
Okay. Now, something I talked about with my mentor a couple months ago before I got let go. First time in my life I got let go by a gig. Shout out to them. But
all growing pains, right?
He ain't tripping. We get into the generational money, man. But he told me about, like, I already had an HSA account with my previous job, but the reason I had it was because they explained it, like, if you don't go to the doctor much, it is probably a good option for you. I didn't understand really what it was. They didn't really break it down well, right? Really, they didn't even break it down. I had to inquire about it because they like,
oh yeah,
nobody usually
companies pushes the benefit.
Nobody usually picks that, just PPO, right? So my mentor was telling me, like, yo, when you put money, it's kind of like a Roth IRA. The Roth is the pre-tax one, right?
Roth is after tax.
After tax. Okay, so the pre-tax, the regular IRA is like if you put money in the IRA, that deduct your taxable income.
Right there at that time, right?
Yeah. And then similar to like maybe a HSA, you put money in there, deduct your
HSA
taxable income.
HSA is more versatile and it has some more benefits, but I mean, you can't put as much money in the HSA as you could do your
right. But you can still.
Definitely.
I was just thinking about like W-2 type employees, like what options they would have, because they don't have. There's not many advantages they have to reduce their taxable income. So like a HSA, a IRA. I don't know if maybe any other retirement accounts. I was just gonna ask you, like, what are a few other options, if any, that somebody could put their money up to reduce their taxable income if they don't have a side job or business?
Yeah. So what? I'll talk about the HSA, and then we'll talk those that are on just the 9-to-5 family and what exactly you can be able to do. So the health savings account has, you probably heard, is like three tax benefits.
Yeah, I was going to ask you about that.
Yeah, actually, let me take a step back before that and explain what exactly is a health savings account. If you take out health from there, it's just a savings account, right? Just think of it as a bank account that is dedicated for any medical expenses that you have. And the government is saying, we will give you a tax deduction if you set aside some money and put it in a specific account, and you can be able to cover your medical expenses tax-free. So the benefit of a health savings account is, and this ties into a little bit where you were talking about the Roth and then your traditional, right? The money that you contribute to an HSA is a pre-tax, which basically mean that portion is not being taxed. You're not getting taxed on those dollars. And then in addition to that, if your account reaches a certain level, you can start investing that money. And so in some providers, they start like $1,500, right? And so then any money that you have over that, you can invest that money in the market. So if you're investing that in the market, you're getting dividends, the value of those stocks are increasing, which means your HSA is growing. That gets to grow tax-free. So you get to pull that money down, and as long as you use it for medical expenses, you don't pay any taxes on it.
Which a lot of people are going to do anyway. So there you go.
So it's basically it's like, wait. So if I just put some money to a set aside just for medical, and this can happen at any time, regardless of what age you are, you're getting a tax incentive for it. So I want to say I don't have the amounts right on me, but I think it was last year, it was around close to 4. And then families, it was like 8,300. So if you're single, you're pretty close to 4. So in terms of what is it that you can possibly do, that's something each year you could be pushing to be able to max out. And ultimately, you just putting money in another bank account and just getting more tax benefits. And now I could kind of talk about the retirement piece since that sort of segue. So with employees, you really get the options of HSA and your retirement plan. Well, with a retirement plan, you can, last year was about, you'd be able to max it all over like $23,000. So that's
How about your IRA?
IRA was like 6.
So are you talking about a retirement plan through a job? Gotcha.
So you have when I mentioned a traditional and now there's several retirement plans that are out there for, well, I guess I was going to say business and individuals, but technically since the business can offer, well, no, it still would be different. I guess I'll say there's several retirement planning options of accounts that you could pick that's on the business side as well as on the individual side. For most of the time, what you see with families where they pick and choose, you have like the traditional or Roth. Traditional is saying, hey, instead of paying these taxes now on the dollars that you earn, you're not going to pay taxes until you withdraw this money. Now, depending on you once you reach a certain age, I want to say that's 50. I want to say that's 59 years. And so once you basically surpass that age, and you pull that money down, you would be taxed on it of whatever income tax bracket of what you were on at that time.
And now, whatever the tax rate is at the time of withdrawal.
Right. Now, let's say and depending on how much money you've withdrawn at that, withdrawn and pulled down at that time really determines, and then other income sources will really determine where you're going to be at from a tax bracket point. Now, you could say, well, what happens if I want to get taxed now and I just take the money out and I don't got to worry about it and it's tax free? That's where you have Roth. The Roth comes in play. Then you say, okay, fine. What happens if my company doesn't offer a retirement plan? IRA. That's where the IRA comes in, which IRA stands for individual. Wow, I don't know why I butchered that. Individual retirement account.
Right.
So I'm gonna say that's the contribution of up to 6, but you also have other maneuvers out there where you have like a backdoor Roth IRA, which are ways to be able to maximize, putting more into your retirement. But the biggest thing of what you see is just trying to put as much money into the retirement account as much as possible. That's the biggest thing as a family that you could be able to leverage. So that, and then if you're married, you got both spouses that max out on both of that on each side, 23, that's 46. And then on top of that, you have both able to get the HSA to hit the 8,300. You over 50 grand of, money being pumped into accounts that is still with you and not out to the government.
Exactly. And that's the whole name of the game.
Oh,
that's
absolutely.
Something that I didn't really understand. I guess growing up, stepping into like working full time, I've been kind of working little part-time jobs throughout high school for a while.
Yeah.
First job, I was a paper boy, but
I was a paper boy too. I remember that. Yeah.
What grade?
Oh man, I can't even. It was, man, I was little, and I'm gonna mess up the grade. I remember they used to drop the stuff off in front of the door with rubber bands, and it was just like,
man, yeah, exactly. Yeah.
Put in the bag, fold it, fold it.
Yeah, fold it.
I
was in like third grade, or like 9 years old.
Yeah. It was around that time. I didn't want to mess up the age to say something off the wall. Like, I was 7, 8 years old. I'm like, wait, what? Like, do around the neighborhood and everything.
Yeah, man. So that was just something that like I didn't understand growing up, like the whole, like people always talk taxes. I like kind of ignored it, you know what I'm saying? Taxes wasn't my thing at all, you know what I'm saying? Because I didn't understand the whole aspect of keeping your money instead of giving it to the government, you know what I'm saying? There's so many different advantages and ways to do so, right? But when you're dealing with a business, they have more advantages than W-2 wage workers. So What are ways like businesses can like legally not pay taxes? Maybe like a couple tips you could give to business owners.
You know, in not paying taxes, that's,
or let's say minimize their taxable income.
I would say in terms of my expertise,
let's say that
there's probably realms in what you can do to not pay any taxes, but most of the time is really how exactly you're spending your money and moving your money that determines how much taxes you ultimately pay. So as a business owner, taxes is going to be primarily driven by the profit of what you make for your business. As you all know, there's different kind of taxes that you pay, right? And the biggest one that we're talking about right now is income taxes. You got sales tax, liquor tax, all these different type of taxes, and businesses, whichever industry and everything that you're in, it's all different kind of taxes of what you're going to have to pay. So that's why I look at it from my lens as being a bit difficult. But on the income tax side, there are possibilities. I just honestly am not sure in setting it up from a professional standpoint of how you could do it. However, with that, of how you can minimize taxes it goes back to understanding that you're taxed on your profit, right? So whatever money you made minus whatever money you spent, you're getting taxed on that profit. So when you think about it and you ask yourself the question, well, what is it that I can do with the money I have? Well, invest it more into your business. Pump more money into your business. What specifically does that look like? Maybe you might need to get some more equipment. Maybe you need to hire somebody. Maybe there's some type of software tool out there that can make your job a lot more easier, but pump more money into your business. Another thing you can do is with the benefit of being in business is the tax code has over 50,000 pages. A portion of that is for individuals and like employees, family, but then a good chunk of it is for business. When you're in business, that opens that code up for you to be able to do quite a bit. I'll give you a good example. You can provide yourself as a business owner a solo 401k. A solo 401k functions very similar to if you were an employer at a job as a traditional 401k, except the concept is just for yourself. So you can, I don't know what the limitation, I would say the limitations are higher than what you have with a traditional. I think you could get almost up to like 50, 60K, right? And so when you think about that, it's like, hey, that's a vehicle that I could be able to use as a business to say to myself, all I have to do is create an account. I don't have to wait for somebody and talk to HR to see if I could get that. Oh, let me create that. Let me then take my money that I earn and put it into my own retirement plan.
So what's a strategy that you see wealthy people use that, people who aren't wealthy and privy to the information maybe could use but don't?
That's a good question. A lot of wealth is generated through putting money into the market. Even like no matter how many ways you want to like slice and dice it, putting money in the market is basically investing in other businesses. And then what I've seen is you can get to a certain point where you can leverage loans. So instead of the compensation being in the form of compensating yourself an income that would trigger a tax, you set it up to really use a loan. Because if you loan and then
it's not taxable.
Mm-hmm. And then if you have enough money coming in from the investments,
To pay the loan, now it's free
to supply you, right? There you go.
Right.
Play the loan and everything. You can kind of play with the numbers.
And that's what the wealthy do for
investments, sure. Right. I have investments that's giving me
that's why people get paid.
Supply.
That's why people get paid $1 and then they get paid in stocks.
Yeah. And
because $1 is not taxable. So
yeah, because you reach a level in corporate where it's like, okay, you get to a certain point where it's like it's not just income, it's equity. And absolutely. That's where you really see people making the big jumps in terms of wealth is that equity piece where they can say, all right, we're going to give you a salary of $150. In addition to that, you're going to get compensated X amount of stocks where you can be able to purchase at X amount of price or vested. And that in and of itself could be a whole nother 6 figures of compensation on what they would say like the equity side. And then you also have just like your general like salary and comp. So,
and yeah. people always talk about like getting a LLC, that's the most popular business structure. It's sometimes for some people, it's like some people don't even know what a sole proprietor is. Like you can start there. You ain't even gotta. So can you talk to me about like some of the other business structures? And you can include some information about the LLCs, but I know like for some people, a LLC may not be the best option, right? It doesn't even really help with tax advantages. You really could like build your business credit and things of that nature, but like S Corp, C Corp, other entities, can you kind of like give us some knowledge on that right quick?
Absolutely. And let me put this disclaimer out there. Like the LLC's purpose is really more so to limit your liabilities of what you do in your business and in protecting yourself personally. Just because you have an LLC doesn't mean you're taxed any different way. Actually the IRS doesn't even really consider it as an entity, meaning that you've never seen a LLC tax return. You don't see, as you're going through the prompts of giving yourself an EIN, you don't really see, oh, hey, you're going to have to now file this LLC tax return. It's really more so there to limit your liability when you're performing business so that it's not that you're not being personally held liable for your business. It's really more of a legal thing than a tax thing. Now, when we do talk about the tax structures, and you touched on it, of what people are typically in, you have what's called a sole proprietorship. You don't even need to have an LLC for it. The fact that you're starting business, and there's a number of ways of what that could possibly trigger, but basically you starting business in the IRS's eyes, and you making money from that business, and then also you can have expenses. They just look at it as like you're a sole proprietor. And so with that, tax-wise, how it works is very similar to what I was saying before. You're taxed on the profit, and you also are subject to what's called self-employment tax. Now, a lot of people don't think about it, but self-employment tax is at Social Security and at Medicare, where you see on the W-2, you don't really pay attention to it, and you see the taxes, and then you see Social Security and the Medicare. Well, as an employee, you're constantly paying that out of your paycheck. So then and that's supplying the Medicare and Social Security. So then the question becomes, okay, if I'm an employee, okay, that's cool for the employees, but what about the business owners? When do we pay? You pay at the end. When you file your tax return, we see what the profit is, and it's okay, you got X amount of income tax on top of that, the self-employment tax. That's a sole proprietorship. Now, the other entities out there that you've heard about are partnership, S corporation, C corporation. Partnership, put simply, is if you have more than one business owner one owner says, hey, we're gonna go ahead and do business, we're gonna be a partnership. Now, with a partnership, tons of flexibility with that. It's kind of crazy. Like you can have one person have a liability, another person own all the assets. There's a lot of flexibility of what comes with a partnership, but from a tax standpoint, functions similar to very similar to sole proprietor. Now we get into the part where you hear a lot of people preaching about S corps and the benefits of getting that. So an S corp stands for a small corporation. Sorry, let me take a step back. So with the sole proprietorship, right, when you're filling out your tax return and you're like, okay, where do I put it? Where does it go? Schedule C. Schedule C, it's on your return. You don't have to file a separate tax return for that. Partnership, S corporation, C corporations, you're filing a separate tax return from what you have on the personal side. And so with a partnership, you file that a month before the individual. Why? Because it's a pass-through entity, meaning that all the information that's on the partnership is going to flow through and show on your personal.
It's a form K1.
It shows up, right, and it shows up in the form of a K1.
Right.
Same thing as an S corporation. It's a pass-through entity. Now you probably heard a lot of people talk about S corporations because like, oh, it's going to save money on taxes. And what they're talking about, or let me be a little bit more clear at times. Some people are like, oh, you don't have to pay as much, like we don't have to pay as much tax because you don't have to worry about this employment tax. And it's like, no. You do get savings, but you still do have to pay employment tax. What rule is with an S corporation is that you have to give yourself what's called a reasonable compensation. Why? Because the IRS saw if you get an S corp, that self-employment tax, the Social Security and Medicare, you're not getting hit with that in an S corp. So what are people doing? I'll get the S corp, so I don't have to pay much of the taxes. Everything is we got to get a rule, reasonable wage. Got to give yourself a reasonable wage. Now they weren't too specific and kept it broad, so there's really some flexibility of when, how much, et cetera. They give you guidelines and criteria that you should, you leverage as a best practice to be able to set up. But there are savings with an S corporation if you meet those qualifications. And then the last one is a C corp. The C corp is when you think of Apple, Amazon.
What does the C stand for?
C corp. That is a good question. I wonder what does the C stand for?
We gonna throw it up on the screen.
We'll be able to put it up. But basically, that when you see companies that have a C corporation, the real focus of that is for investments, to get investments, to be able to get funding, because it's a lot easier to be able to transaction funding with a C corporation as compared to an S corporation. And so that's where you see, all of the public firms and everything of what you see, they're structured as a C corporation, for that reason.
Dope, man. I hope the business owners out there was taking notes.
And each one of these entities, I can probably talk at lengths a bit of pros and cons.
So what you're saying, you want to come back for?
Oh yeah, sure, definitely. I'll definitely be able to drop some gems of the pros and cons and understanding. It's the entities and what's out there. It's a lot. It can be overwhelming too, and we started to touch a little bit with touch nonprofits, but I'm also starting to get a sense of foundations, like having a foundations. I've seen it with professional athletes that have foundations. And at first I was like, this is interesting. Why exactly I'm seeing this trend? And now as I'm starting to learn more about understanding it.
Like, how do taxes work with that? How does that go?
You don't pay taxes with it, but it's pretty much owned by the public. So it's a lot of work with a nonprofit, because it's like you have to have a board. With your purpose, you have to really be sticking with it and have documentation. Your tax return, when you file a tax return, it's out on the public. Everyone could be able to see what is it that you do, who gets paid, what, and
that
not everybody.
To the audits that we was going through back when I was working, like, we coming through to make sure that documentation match what y'all said y'all was going to do for these people.
Right. And that's where I found in my firm a lot of growth because of that requirement. Because what would happen in the nonprofit space is if, like, dollars wise, if you're trying to grow a nonprofit and get to 6-7 figures and everything, what the money is with foundations, and grant agencies or other organizations that offer grant money. From the trend I see with like individuals and make contributions, like folks ain't, giving you $500, $1,000 a month, and being able to commit to that, and so the bigger dollars, as in when folks can be able to write you 5-figure, 6-figure checks.
Absolutely.
But when they're doing that, they want to see some form of
anybody giving their money out, even in a for-profit space. You watch Shark Tank, you got to break down what you're gonna do with this money if you want me to give you this money.
Absolutely.
Can I ask you to recommend a few books? Like a few books that you feel like would help the audience, get on the right path to generational wealth?
Rich Dad, Poor Dad, I feel gives you that inspiration, that push, that drive of saying, hey, I can be able to do this and be able to open up this space. And there's a lot more mechanisms around me to help me get in that mentality, or how's a better way to do it outside of making money work for you. I think that's you want to get that mentality of making money work for me. And the way you make money work for you is investing it, putting in a savings account. We have interest, right? Millionaire Next Door is a great book just to get an understanding of trends of, hey, what is it for millionaires? What I believe I might be butchering the author's name. I think it's Thomas Stanley did a study on thousands of millionaires, just basically to get a trend and an understanding of how exactly they do things. Now, at this point in time, it might be a bit dated, but I really did like some of the practices and the habits of what it showed, which was really a trend of living below your means. How to Win Friends and Influence People is if you need assistance with relationship building, relationship management, networking, man, that book has like 20, 30, 50 tips that you can just pick and go and run with. And there's still some that I use to this day that helps with.
To this day?
Yeah, absolutely. Like one, I remember one of the tips was like one of the beautiful things that people want to hear is their name. So when it comes to talking with a waiter, a waitress, or someone across from you, just being able to say their name is like, you don't even think about it, but Jane Doe might have had her name on a tag for the coffee, and as a barista, and no one did say her name. But if you the first person to say, "Oh yeah, thanks, Jane," she might, that plays a lot for people. Negotiations book, Never Split the Difference. Oh man, that was such by Chris Voss. That was. And it wasn't, what I liked about that book was it wasn't this technique of trying to get someone over. It was really more so of how do I leverage different methods and techniques to delve deeper in gathering more information, and then using that to help influence the situation of what I'm talking about. I thought that was a really good one that kind of ingrained it. And then the last one I would say is, it's a thick one, but it's a good one. E-Myth books, really good. E-Myth Mastery is the seven disciplines on how to build a world-class business. I really enjoyed that book because, and I'm still going through it because it hit on, it basically had like a leader in each different facet of your business, like marketer, financing, operations, and sales. And it was like, hey, this is what you should be thinking about, understand to be good in sales, marketing, if you're trying to build in business. So that was a good book for me to reference in helping me build out certain things of like, okay, I got the operations down, but marketing? What do I need to think about more? Sales? What do I got to do? Client servicing? So, yeah.
Absolutely. That's dope. That's dope. Man,
I keep going, but I will.
man, you coming back. So, man, you're going to have another list when you come back. Why don't you let the people know what it is you got going on, what's next for you, you know what I'm saying? Like all of the services that your business offers.
Yeah, sure. I would say on the core round of things is just continuing to learn and grow. I feel like I'm just in a really good spot and blessed to dumb down with that, because there's always more things to learn. And then also too, blessed to be in a position to be able to just continue to open doors and get more of our people into commercial real estate, because it's such a huge space. On the business side, it's man, as I'm starting to think about the question now and sort of thinking of what that next level looks like, it's a combination of things. It's continuing to maintain, continue to grow from a sales piece, but also having my team develop. We have a new system in place, so getting more into a groove of really getting that down. Then branching out more, doing more, trying to put myself out there, doing more podcasts, more webinars to get the name out there. Because with our services, it's quite a bit of services outside of just taxes. We do bookkeeping for businesses, bookkeeping for nonprofits, and helping them with audits, helping them assist them with their documentation when it comes to grants, business financing, just general business consulting in general. So when it comes to the level of opportunities out there to really be able to help others, is just continue to just branch out and really just grow from there.
Well, man, why don't you let them know where they can find you? Oh,
man, social media, website, bradleyfinancials.com. Instagram, Bradley FS with the _. That's where you could be able to find me. And then you can also find my business on Facebook on Bradley Financial Services.
Dope. Man, well, I appreciate you for coming out. Definitely want to
happy to be
back,
here,
man. Hey, yo, if you really enjoyed this conversation, comment below. Let us know, like, something you gain value from. We out here trying to get generational money to get generational wealth.
Absolutely.
Like, comment, subscribe. We appreciate y'all. Chep.